started, and if anybody's people probably, yeah. Okay, so for everybody here and on Zoom, we have Aaron MacDonald of Billiard Insurance, and he's going to talk to us today about insurance. You take it away.
Morning, everyone that's joined virtually. So we have a few people. For those of you who don't know me, I am Aaron MacDonald at Billiard Insurance Group in Bedford. We are located on Duke Street. If you know where that is, it's just before you go into Walmart, Bedford Commons there. We have a presentation here today to kind of beef up a realtor's knowledge on how insurance works. There's been a lot, I see a few names and a lot have been around the block, so you probably know a lot of this stuff. Obviously, there's been a lot of growth in both of our industries, and we felt that there was a need to kind of teach and train the real way that insurance works as opposed to what we all think. There's a lot of common misconceptions out there that people tend to still believe, you know, it's the old rent cars cost more for insurance. That's a myth. There's a lot of myths around home insurance. So this is really a guide designed to help you be the expert that your clients depend on. You know, you're the expert on finding the best inspectors, working with the best lenders. You're all great realtors, and hopefully stay up on your education and keep yourself privy to how the market's changing there. Home insurance is no different. So we'll kind of dive right into that. So, start off, what do you think the number one question insurance professional, broker, or agent is asked about realtors? And you can add it in the chat for anyone.
Do you insure high-tech?
Anyone else?
Polly B.
Do you insure high-tech and Poly B plumbing? The answer to that question, yes. So with that, we'll come back to it because there's going to be lots of questions on it. The short answer is yes, it can be insured. There's an asterisk on it. A lot of insurance companies will not insure it now. We have to go to specialty insurers. For the most part, we've never ran into one that we couldn't insure. A little bit about BIG, as we call it, Billiard Insurance Group. We are a fully independent, privately owned group of brokerages. So we have 3 offices from Nova Scotia to Alberta. 3 offices owned by a managing partner like myself, with the exception of our head office in Welland. So we work kind of as a collective. The benefit to that is we get to operate like a large company. We get access to the markets like a large company, like BrokerLink would be another brokerage, national presence. But it also gives us a lot of back-end support to help our operations kind of move smoothly and swiftly, as opposed to it just being, you know, my small 6-person operation. We have a lot of back-end stuff. We offer everything from home, auto, pet, travel, life, commercial, investments. It's an insurance product that you can buy, have it all under one. And a little bit about insurance brokers. So a small group here in the chat, if you want to chime in, who knows what the big difference between a broker and an agent is?
Broker, you are on to the different companies to find the best rate.
That's part of it.
Agent is like a specialist.
Not quite. So the main difference between a broker and agent, one, a broker works typically with multiple companies. We don't represent any single insurer. We don't actually represent the insurer. We represent clients. So our fiduciary responsibility lies with the client, not with the insurer. So you would have brokers like myself, and then you have direct writers, which I won't name, but I'm sure you can figure those out. Their responsibility and their day-to-day job lies with the person that signs our paychecks, which is the insurance company. Our responsibility is to make sure that our clients are getting truly unbiased advice, that they're getting the best coverage for the price, best price coverage. Distinction being, especially lately, a lot of consumers want to purchase on price. That's not always the best way to go, because you could have large gaps in your policy. Cheapest is often not the best. We know that from everything, you know, footwear to cars to even the cell phones we use. You buy a cheap one, it's not going to last you as long as do the research. Buy quality product. Insurance is no different. We do the work for the client. So rather than the client having to call around to different insurers, different brokerages, whatever it may be, keep it all in-house. My broker specifically, we work with 22 different insurance companies. With that, we take all of the data in the background, we'll take some time and we will find the best package that suits the client's needs. Obviously, we do take into account balancing budget. We're not always going to come with the best price. We will always put our best foot forward in terms of coverage first and then allow the client to kind of leave that conversation and work their way back. Expertise, market knowledge, and education. So brokers, we actually have mandated mandatory education, much like realtors do. I know you have your NSAR days, you have to do your annual education. Brokers have to do the same. We also have designation, which is a CABE, Canadian Accredited Insurance Broker. And we have the CIP, which is open to the entire industry, which is a chartered insurance professional. If you were to look up LinkedIn brokers versus agents, you'll see brokers carrying those designations than agents because we care about knowing what's going on in the market, especially with our bring up commercial insurance. We have to know more than the average payer. Commercial insurance is a lot of moving pieces. It's custom policies. Every line is custom designed on a commercial policy. Your standard homeowner insurance, it's a little bit more prepackaged. But when you get into those risks with high-tech and poly B, you need to know how to explain and read the exclusions that the insurers are writing in to make sure that the clients are aware of where to be covered. And we already touched on the last piece, everything's in one place. So it's a one-stop shop. You refer your client to a broker, hopefully to us. We have to call one person. Don't have to call around. They don't have to waste all of their time. People are busy. My process, especially now, is more hectic than ever. See it firsthand. And for those of you who do know me, my wife's an agent with Keller as well. So you guys get pulled in all different directions. Those of you that have me on social media, I recently made a post about fun of realtors be like, I just have to take a quick call. Seems to be my life all the time. No matter what is going on, if you want to, you're not busy, book vacation is what they say. You always have to take a quick. Yeah. So we eliminate that. Less calls for your clients, less calls for you. We'll keep you in the loop of the whole process. Make sure that you're aware of what's going on. All of it. So we're going to get into the rating factors. This is the meat and potatoes of why we're here. So often we will see clients sending us, here's the cut sheet for the property. That's great. That gives us a lot of the base information that we need. Home itself. Insurance, the home, is actually one of the smaller rating factors of what determines rate. Insurance today is a rate by peril product, meaning every possible thing that could happen to a house, be it fire, hail, wind, sewer backup, flooding, all have individualized rating. That rate is driven by multiple factors, the building materials of the home being one. There's three main factors that really determine a rate. One is location. You can have the same home here in Bedford, or you could have the home in Mount Uniacke. You're going to have two very different policies with two very different rates. Because what the insurers do is they take what's called an FSA, which is based off the postal code. They look at the loss data in that area. They'll look at Bedford B4A and say, we use Union Street, for example. Everyone's familiar with that. We've seen a high volume of flood claims. So they will break it down by that 6-digit postal code, and they will base the water coverage appropriately. Some will restrict it, some will not offer it, but location matters more than you think. It's not just, oh, it's a $500,000 home that's 2,300 square feet and has electric heat. Insurance score is another large factor. So insurance companies use very basic credit data to determine rating, more so discounting than surcharging on a property. The reason they do that is it is statistically proven that clients that have a strong financial stability are less likely to make small frivolous claims. Those small frivolous claims cost insurance companies big bucks. Insurance companies are prepared for the catastrophic losses like the major flooding that we had, the wildfires that we had a few years ago. They build that into their rating long term. What they're not prepared for is when clients are calling and making things for $2,000 and $3,000 frequently. Because even though they're only paying $2,000 or $3,000 worth of damage, they've had to pay someone a salary, probably 2 or 3 people. They've had to coordinate companies like First On-Site Restoration to come out and take a look. All of these expenses really add up. And those small claims are really what drive rates up more so than the catastrophic losses. To say that large losses don't play a factor, in 23, 24, we saw almost $1 billion in claims in Nova Scotia. It's never happened in our history of Nova Scotia, dating back to the Halifax explosion days. So it was a big deal. So if you've seen your rates jump progressively 25 and now into 26, that would be why the data lags a little bit. I think we're coming out on the back end of that. Good here. Yeah, things like the slow melt that we had earlier, late last week, is exactly what we need to see. We want that snow, especially when we've had a lot of it, to melt slowly. We don't want it to be accompanied with rain. It's winter time, warm temperatures and rain for a day creates flooded basements. That water's got nowhere to go. Another large rating factor is history. So the homeowner themselves, not the history of the home. The home could have had 30 things from the previous owner. It's not even looked at for the new one. What's looked at is the history of fire. How long have they had insurance? Have they had claims on previous addresses? Have they ever been canceled for non-payment? Have they ever had any misrepresentation or property risk before? Those three factors, probably 40% of rate that comes with a home policy. We have the standard information. This is where the cut sheet becomes very useful because it gives us style of the home that matters. Is it a bungalow? Is it a split entry? Is it a two-story? Is it a mini home? Is it a condo? For obvious reasons, we know why that matters. Building up is cheaper than building out. Anyone of you have ever done construction, you know that. The split entries tend to get a favorable rating because typically they don't have full 8-foot basement walls. And you usually have a half wall on one side of the home. So the likelihood of water intrusion comes a little bit lower. The risk is a little bit lower. The slab itself isn't same construction, so all of those factors go into it. Mini home risks, same idea. We'll talk about mini homes a little bit later. There's more details. They are insurable. Older ones aren't ideal. It becomes more difficult to insure, but they are there. And the condos are condos. Everyone will insure a condo. There's no real restrictions on it. The only time we've ever run into an issue with a condo would be if the condo corporation was publicly in financial. So we do ask those questions. We want to know, is the condo corp strong? Is the condo corp what's actually covering the rebuild of the condo? Insurance policy is covering the build of the interior.
Sorry to interrupt.
Yeah.
That's something that the real estate agent will provide you or the client. Like how
We would typically just ask, what as part of your due diligence when you're purchasing a condo, you're going through that. The lawyer's going to flag it for you anyway. So if it does come up, it's always something you should recommend to your broker or agent that you're working with. Ultimately, if the condo corp is in financially stable, you wouldn't advise your client to move ahead with that. I don't think the lawyer you're working with would either. So we don't see it a lot. I know recently I heard there was one or two buildings that were really rough shape for their reserves. That's where it becomes very important to make sure that they're not buying a very nice condo policy. People will often say, well, my friend has a condo, it was $150 a year. It's not really covering them for anything. Condo policies, you can purchase loss assessment coverage, you can purchase unit contingent coverage, you can purchase excess deductible coverage. All of those protect the owner of the condo in the case that the condo corp can't cover the deductibles, or if they have to raise their deductibles because they've got more. The size of the home, obviously that matters. The house, the higher the reconstruction cost, the higher the debris removal. So if there's a total loss on a home, what's factored into every rating is the cost of debris removal. Typically, insurers will allow between 20% dwelling limit. In calling stuff out. I think that was pretty obvious that square footage of the home matters. That's why it's important to be accurate. So making sure that you're showing a home and it's going to move ahead with it. If you look at the cut sheet, it says, oh, it's only got 1,000 MLA and you're walking through and it's very clearly 2,000. Maybe we'll take your little laser measure and kind of get some exterior measurements just to make sure we know that the data is not perfect. Sometimes there's key in errors. We want to make sure that we're getting it correct for the client. Occupancy is the other piece that's really important. If it's a rental, it's a different policy. primary residence, it's a different policy. If it's occupied by a family member, it's a different policy. So not every insurance policy, it's not you just go buy a home insurance. The occupancy matters because there's going to be different types of coverage you need to purchase. If it's a rental, I want to purchase forced contents coverage or white goods, you might hear called, just covering things like the appliances, washer, dryer, fridge, stove, dishwasher, so on. On rental property now, there's some insurance that are starting to include tenant damage coverage, which is huge presently. Seen a lot of homes transitioning from tenant occupied to owner occupied. I've seen pictures that are interesting to say the least. But if it's occupied by family, that's also really important because if you're not charging rent, it allows us to give a favorable rating. You know, if you're putting your children in there or elderly parents or brother or sister, what have you. As long as you're not actually charging a rent, if they're paying the mortgage directly, we can do that as a secondary dwelling as opposed to a rented dwelling. It means they don't need to purchase their own contents policy. You get a little bit less coverage there. Any questions online so far?
I find it difficult to find an insurer that will do seasonal coverage. No.
We have a lot of options for seasonal. But when you go with a lot of the direct companies, short rentals, secondary dwellings, seasonals, or anything with Airbnb, typically want to insure your primary residence along with that additional residence. We want to do that as well. We think that there's benefit keeping everything under one roof. It's easier for everybody involved, but not necessarily that we have to do it that way. We have standalone options for basically every product that we sell. Benefit to doing that is sometimes we know we're not always going to win on rate or coverage. So it may be best to leave your primary home where it is, but we can take care of the seasonal for you. We get into the interior of the home, the big three: heating, plumbing, and electrical. This is the part where it says brokers really rely on the realtors and inspectors when you're going through those inspections of the home. So there's some details that are highly important, often get missed. So the things that insurers are looking for are the age of the heating system, the type of system there is, the last date it was serviced, if it is oil or propane. Electric, that's not really important. The age of the oil tank, the type of the oil tank, is it steel, is it fiberglass, single walls, double bottoms, is it rock tank, is it Velcro tank, all of these details. If there's any wood heat certification, not necessary for all insurers, but recommended for everyone to do. I think if you are going to purchase a home that has any type of wood heating, you should certainly make sure that it works appropriately, that the chimney doesn't have any holes, cracks. You're not going to cause a fire. Nobody wants to turn it on in the middle, go to bed, and then the fire due to grease build up, that kind of stuff. Plumbing, the age of the plumbing system, plumbing material. If there's any active cast iron, that's a big one to look for, especially with older homes. If we're looking through specifically this section of Bedford, if you're down north in the Halifax, South, or anything on it. So really, that includes the sewer line. If the sewer line is cast iron, then you want to look to see has it been lined. It's really important to know. Any updates to the plumbing? Have they changed it in bathroom fixtures? Was there any renovations to the kitchen plumbing? And the age of the water heater. Get into electrical, same stuff. How old is it? Have there been any updates? Has the electrical panel been changed at some point? Fuses to breakers. Is it a breaker or fuse panel? Is it copper, aluminum wiring, and service amperage service coming to those? All these are important because they're, as I said, they're all rate by peril products. So these are all nuanced details that you might think aren't really important. Could be the difference between getting a rate of $1,500 for a home or $2,500. It could be the difference between Intact accepting the risk or Aviva accepting the risk. Each insurer sets their own guidelines. Some of them will take things like aluminum wiring, some of them don't. Some of them will take poly B and context, some of them won't. So same with cast iron. So it's important to pay attention to those things as you're going through. Take pictures. If you notice something that you think might be important, remember, especially with the heating systems, I know the inspectors take a lot of pictures, but they take high-level pictures. So if you're walking through a home on the heating system and you see the little sticker on the furnace that shows last date service, snap a picture. You see the oil tank, go and snap a picture of the label on the tank, take a picture of the full tank so you have that ready for your client. Often the pictures that come in the inspection report can't read them. You lose resolution by the time they get uploaded into those PDFs. Same with plumbing, if you want to remember as a copper, as a PEX, or whatever it is, wonder a couple things, snap some pictures, or if you can see it in the basement, snap a couple of pictures. So actually, same thing. It's easy to remember that
I
way.
think Lynette has a question.
Hi, just a quick question. I know probably a lot of us are running into a lot of homes now that they're at the age where we have Tech and a lot of them being for sale. And I know there's lots of people there's lots of companies that will cover the insurance, but is it true that the deductible is a crazy amount when you're dealing with Tech?
And no, it depends on what your definition of crazy amount would be. But with Tech, was a class action lawsuit, I think we're all aware of. I believe it closed registered in 2021.
Yeah.
So prior to 21, a lot of insurers would take on homes, no questions asked with Tech, because they were all registered as part of that class action suit. If they saw a loss, they were getting their money back. Now, when we look at insuring market, there's presently standard market covers Tech. You're being told otherwise, they're incorrect.
Sorry, you got cut off. Sorry, what did you say?
No standard market that covers Tech Club. So your Intax, your Avivas, your Economicals, your Pembridge, I'm only going to name the companies that I work with. There are directors that a lot of people use that do not cover Tech. You know this firsthand. They will put, if you look at the policies, you'll see non-standard plumbing exclusion on there. Is specifically excluding Tech and Poly B plumbing.
Okay.
Now, we do work with one very good insurer. Name is CanSure. They're a specialty insurer. What we would call an MGA. They're kind of a broker for brokers. What we do with them when we have a risk with Tech or Poly B, a custom policy built for that home. That does not exclude the Tech or Poly B plumbing. To answer your question about the deductible, yes, they do have a higher deductible on a loss, only if it's associated with plumbing. That deductible is typically $5,000.
Okay.
Related to Poly B or Tech, you get standard $1,000, $500, whatever the client wants to choose on every other type of loss. And that deductible is there to reduce those small frivolous claims that we talked about previously.
Okay.
When you all sold homes with Tech, Poly B, my 12 years in this industry, I've seen one catastrophic loss due to Tech plumbing. I went away on vacation for 6 weeks and they had a fitting break on the top floor. They came home, their entire house was flooded. That's why when you go on vacation, have someone check your home, 72 hours. Typically with Tech and Poly B, you see the problems happening before they're really a problem. It's often at the fittings. If you change those out, you're probably not going to have any issues with that. It's typically associated with hot water baseboard heating because the pipe can't handle the heat that is producing. There's lots of ways to mitigate the risk. It's not something that I would say we're trying to replace. If they have the means to do so, certainly, because they'll get other discounts for having stated all of the plumbing in the home. They love the home. Wouldn't deter me from buying a home with Tech. Know how the insurance works. You do. Would still say if you love it, call a broker. They'll explain it to you, explain how it works. In the grand scheme of things, as a homeowner, you'd hope that everyone has a contingency fund for things like this. Stay on top of the maintenance, have it checked annually, have a plumber come in or the HVAC guys and look at it to make sure that there's nothing wrong with it.
I have to say I'm personally, I had a home with Tech and I was involved in the class action lawsuit and I did get money from that before it concluded. But I would personally have no issues purchasing a house with Tech. But there's a lot of misinformation out there that scares people, and I think it's just needed to be educated a little bit more. I don't know. I just think there's a lot of homes right now coming up that have Tech in it. The age, everybody's moving now, at that age, and their home seems to have Tech in it. And I wish there was a little bit more education instead of fear, because it's not that scary really. But All right, well, that's good. I'm glad. I didn't know about that deductible just being on that, and then the rest of the insurance had a smaller deductible. That's great.
So there are lots of properties in HRM with Kitech, you know, I
Yeah.
live in Sac, tons in the Sackville area, you got Timberley, Tantallon. Basically, this whole side of the city,
Yeah.
depending on what it's probably you're gonna run into Kitech. It's not a big deal. The insurance products are there, they're covering it, they're again, it will go back to that location factor, whether or not they're gonna give full amount of insurance for water damage. Typically, they do when it is associated with contact because that's considered rupture, not sewer backup or overland water. That's included in most broad form homeowner policies. It's just the higher deductible that you're gonna deal with.
Yeah. Thank you, Aaron.
Moving on to the next one here. My favorite is it looks to be in good shape. This one, we hear this a lot from clients. I'll note that insurance is very specific. It's not speculative. So what we often hear is the inspector said the roof shingles have about 10 to 12 years. Unfortunately, that doesn't tell us as brokers how old the roof is. Because a 20-year shingle doesn't always last 20 years, a 40-year shingle doesn't always last 40 years. But what I would encourage all of you to do is ask the current homeowner, did you replace the roof? Maybe not. You purchased the home. Were you aware of any roof replacement? It's probably been updated within the last 2 owners, and most people will be able to kind of give you a range on that. If what they're telling you lines up with what the inspector is saying, it's left in it for life, that's typically going to be good enough. And if you're really unsure, get a roofer to come out there, the experts, they can look at it and tell you right away. Obviously, take that with a grain of salt. It's like getting a plumber to come into a Kitech property. Know what they're probably going to tell you at some point. It's also their job, so you have to respect what they're doing there. The water heater, when we hear often, oh, it's rental. It's nothing to insurance. We need to know how old it is. If it is a rental, that one's easy enough to figure out. The current homeowner can contact whoever they're renting it from. Typically, it would be oil company, usually Irving or Baltimore. So you can call and find out when it's installed on the property. And heated, I don't plan on using it. This one comes up a lot with we have oil or I have a wood stove. I also have heat pumps. So I'm just going to use the heat pump. It's great. We still need to know the details upon the heating source because they are in the property. Do need to be rated for. There is still risk there, especially with oil heat pumps. When you get cold snaps like this, you're going to need to use your oil, and you're probably going to want to need to use your wood heat. The heat pumps just aren't going to keep up and keep us warm. But knowing the details that we talked about earlier on heating, or even for heating sources that are not even in use, are still important. If they're really not going to use a wood stove or oil heat, recommend that they have. Removing that would then also save them on their insurance because they no longer would have to pay a heat source whether they're using it or not. Oil tanks, the key things you want to look for, age of the tank. So I got a picture here of the label that's pretty much affixed to every oil tank. If it is not visible or legible, that can pose a problem. Then you need to do a little bit more digging to find out, was that tank installed by the current owner? Do they have any paperwork on it? But otherwise, we don't really need to know that. If the sticker is visible, we can tell how old it is. The reputable oil companies not going to install a used tank. They're out to. Key components you want to take note of and pay attention to: the fill pipe, the vent, gauge, and the material condition. So you have here, number 3, very small, is the gauge. I'll have your fill pipe and your vent pipe. There should be 6 inches. The height difference between the two of them. If there's not, then that would obviously need to be addressed. The oil filter, pay attention to its location. Is it the oil tank or the furnace boiler? The furnace floor boiler. Is there a loop in the line, and is the line protected from impact? So if someone has to walk across the line in their utility room, should have one of those rubber kind of conduit mats over it so they can't trip over it, snap it. And then, is the tank accessible? You're selling the home to somebody, so all of the junk's going to be removed. We have seen properties where the oil tank has been built into a wall because the person want to look at it. They closed off their furnace oil tank to create more living space. So it needs to be accessible. It needs to be able to breathe. It can't be hurt or hit. Then you can't tell if there's any problems. It also would mean that you can't have it inspected annually as you should.
So are you finding, I showed a house the other day and he wrote an offer. We were in competition, but we asked for the oil tank replaced. It was endorsed, but it was 18 years old. So I figured they're gonna get a letter soon from their insurer saying, gotta be replaced. But it's general, I will ask for that to be replaced.
Yeah, so oil tank age is really important. It's an outdoor tank and it's steel. Great, easy way to remember, work this into you. In 10 years, it needs to be replaced by every insurer. So if it's at 8 years, let's start thinking about that. If it is indoor, most insurers will take them for 10 years, some up to 25, depending on the tank. That's why it's important to get that picture of the label. Certain Granby tanks, companies like Intact will take them for 30 years indoors. If it's a fiberglass tank, almost all insurers that we work with will take a fiberglass tank for 20 years outdoors, 30 years indoors. If it's a rock tank, which is the Cadillac tanks, you don't see a lot of them, but best one, those are good for 40 years, whether they're indoor or outdoor. And I can send you all of these kind of details so that you have a quick reference sheet, go through that. But great point, it's getting close to that age, work it into your deal to have it replaced, because otherwise the owner is going to have a policy for a year, have to scramble to have it replaced prior to the renewal. Because insurers are very, very, very picky on oil tanks. There are some insurers out there that will let you have a tank for 100 years. What they do at the 10-year mark is they will restrict all coverage related to any pollution contamination from that oil tank, which you don't want to have to do. We're talking millions of dollars in remediation. It probably an inhabitable home after the fact if the oil leaks into the soil, especially if it's on well and septic. So it's pretty much useless. The land is useless for a very long time. Common insurance myths that we hear from clients. Inspection had no issues. It's not equal durability. So just because all of the things look to be in working order, see a common theme here, the age of those things is really important. Insurers want to see that the home is being maintained and updated, not just sticking with the status quo, because materials change, things get more efficient. We learn things like Kitech and Poly B are probably not as good as they were when they were first marketed. We could potentially be looking at 30 years from now that they say PEX had the same issue. We don't know. They want to make sure that you're kind of maintaining and keeping the home up to date. Seller's insurance does not set the standard. This is a big one. The reason I have this on here is we've seen several times where we'll have a client come to us and they'll say, oh, this property is currently insured with Aviva. That's great. It may have fit with Aviva, 5, 10, 15 years ago when that current homeowner just the home and they get grandfathered in to be able to stay there. That doesn't necessarily mean that the new owner is getting the same success with that same insurer. Underwriting guidelines and acceptability guidelines are constantly changing. We look at every risk as if it's brand new and it gets applied to the new guidelines, not to what it's currently insured for. Also important to kind of remind your clients that it doesn't set the standard around price. If they've been with the same insurer for a very long time, they could have loyalty discounts built in, policy, especially we see it now if someone bought 5 years ago, may only be insured for $350,000, whereas now it is going to be closer to $7,000. Rebuild comes. So those factors really change the price by quite a bit. Purchase price does not equal the insurance value. So when we see more common with those, we'll say substandard risks like Kitech and Poly B, many homes especially, we see that. Purchase price unfortunately does not equal what we use. We use an insured to value calculator that is approved by all insurance companies. Take all the characteristics of the home that we gather from you, put it into a calculator. It tells us what the insurance company estimates it would cost to rebuild that. We have to stick to that number. We can't move it. We can't change it. We can't. There's a couple things we can do to increase it. If there's some customization in the home, if it has a higher kitchen or higher flooring, but that's the number we have to use. You can't just say, well, I'm buying this house for $1 million. I want to insure it for $1 million. And the reason being is it may be overpaying, especially between, 21 and 23. Seen it with new construction homes. They were going for, $1 million plus, and now that we just back under $1 million. Insurers don't want you to pay a premium to overinsure the home when they know they're not going to give you much money for it. The other factor is your purchase price includes the land. If you think about it logically, what we see is I recently did a deal in Timberley. Purchase price was, I want to say, $450,000. Insured value calculator came back at $360,000. The lender pushed back and said, hey, that's not insured to the mortgage value. We had to remind them that the land does carry value, and the insurance company isn't rebuilding the land, they're rebuilding the home. And if you work with really competent lawyers and good lawyers, they'll understand that. Just get in front of it and explain it to the lender when they're going through their file. I already touched on that the cheapest is not always the best option. Also, the cheapest policy may not satisfy the mortgage requirement. A lot of lenders now want to see overland water on policies. They want to see that you have coverage for the oil if it spills. They want to see that high-tech or poly B isn't specifically excluded on it. And there are policies you can purchase that won't have those coverages, and could be 30, 40, 50% less, but they may not satisfy what the lender wants to see. They want to protect the asset as much as you do, because if you default, that becomes theirs. They need to make sure that the home's going to stay in good standing so they can resell. So insurance and financing. Insurance, we just touched on that one. They often have to meet specific lender requirements. They usually want to see it insured to the value of the purchase price. If it's a standard home, it's probably not going to show on paper that way, but we add what's called guaranteed replacement cost endorsement, which essentially means that the home burns down, insured guarantees to rebuild it regardless of the amount that it's insured for, as long as we use that insured to value calculator, that tool, to determine, help us figure out the rate and amount of insurance that the property should have. What's really important, especially in today's market, because you would never, as brokers, and I'm sure you would never, as realtors, advise someone to settle on a loss for cash. We look through the Town wildfires. Anyone that settled for cash probably would have lost $200,000 to $300,000. As opposed to getting the property rebuilt, if they didn't want to live there anymore, rebuild it. Brand new home is a lot easier to sell than a vacant piece of land. We've already touched on the occupancy. That matters a lot for insurance. We've seen clients come to us and say, oh, they can't say anything about a rental. It's between them and their mortgage broker, because that would be mortgage provider. You have it down as a homeowner. Is it actually going to be occupied as by renters? So that's really important. We're going to match the true occupancy of the property, regardless of how mortgage going through as a secondary property or as a property home. Limited peril policies may affect funding, so that kind of goes back to the first point. Policies with a lot of exclusions are going to like to see less. You have a hefty down payment and you're outside of what their risk factor would be on that property. Older homes may be restricted. So old homes are kind of starting to be treated a lot like the high-tech and poly B houses. Not because they're not great homes, but because we can't verify updates. Insurers like old homes. They're better than a lot of newer homes. The problem is a lot of patchwork in them. So if you are looking at an old home and you can see that, part of the inspection process may be recommending to your clients to get in red seal trades to come and inspect the electrical and issue a letter that it's in working order, it's not overloaded for the size of the home and the occupancy of the home. The plumber come in and do the same. Roofer come and check out the roof and make sure that there's no underlying damage that you can't see. An old home. Question, Ollie. Anything over 80 years, but anything over 30 years is where the insurers want to start seeing updates. What they would consider old home is at 80 years, at 100 years, most insurers want to see that home has been completely gutted down to the studs and refinished. Not necessary, because especially on the peninsula, they're a little bit more accommodating. They know that people want to preserve the history and the heritage of the home. So that's when those extra inspections come into play to make sure that the property is up to date, that there's no active novelty, things like that.
There's like towns like Lunenburg and Aptos Royal where they're all heritage.
Yes.
people have to be able to insure them.
And there's lots of insurers that'll take on heritage properties. Intact, and I keep mentioning Intact because they are the largest insurance company in Canada. They're probably the best. They have the broadest risk appetite. I actually love insuring heritage homes. They just want to make sure that everything has been updated and upkept as per the Heritage Act. So when you purchase a heritage home, you have an obligation to maintain the heritage of that property, but you also have an obligation to make sure that happening behind the walls isn't in disrepair. So making sure that you're checking that stuff is really important. There's lots of markets out there that will take on older homes. The pricing obviously is going to be higher, especially if it is a heritage home, because they have to be rebuilt to a very specific spec. There's lots of custom woodworking involved. These homes are beautiful homes. I do quite a bit of business in Vertical Bay. Some of the houses that we see are beautiful. Some of the premiums I see not so much. I mean, good for me, I guess, to build a book of business. But clients that are purchasing those homes, they know what they're getting into. They're not going into it blind. It's a unique buyer that wants it is willing to buy a heritage home. So it's not as much of a sticker shock as you think. It doesn't hold up the deals on the insurance side. Private lenders, that's becoming another large bone of contention with insurers. They don't like private lenders. They don't like private equity. Oh, that's more of a conversation between the client and the mortgage broker. But if they are going to be using a private lender, you're getting financing letters, you'll know these things. Advise the clients to engage the insurance conversation sooner than the day before conditions have to be up. You have to have your full agent, because the insurers want to know who the private lender is. Is it their uncle? Is it their mother, father? Is it a company like Gracebrook Capital? Where are they using a private lender? Is it because if it's only because they're doing bridge financing while they're waiting for another one to sell? That matters a lot. Will allow us to put it into a standard market as opposed to a specialty market. Are they working with a private lender because they're a high net worth individual and merging some investments with that lender? We get a favorable interest rate. There's lots of reasons people use private lenders. Work with a lot of great mortgage brokers that work with private lenders, so we have a lot of experience in insuring properties that utilize that. Reconstruction cost versus market value. So we already kind of touched on this. We can't just be simply insured for the purchase price. Have to use that insured to value calculator to determine how much we're going to insure the home for. Insured value doesn't include the land. It's often not going to match the purchase price. We've seen some, especially recently, where it's a lot higher than the purchase price. That happens now with mini homes quite a bit, especially older mini homes. The insured values get much higher. Happens a lot in rural properties because you'll find, a 2,500 square foot property that we sell for $300,000 in Windsor, but the reconstruction cost is going to be equally as much as it would be here in the city. And then inspections. So insurers, if the property is an older property, or if it is a high value property, typically that threshold is around 1.2 to 1.5 million, depending on the insurance company. We'll order an inspection on the property. Inspection isn't to scare the client. It isn't to make sure that they're telling us is accurate and complete. It's to determine that the value that the home's being insured for is correct. The calculators that are used are not perfect. They're not going to capture everything, especially in high value new construction homes, because we're not going out to the house and taking photos and taking notes with the clipboard. We're using a lot of virtual tools to determine that value. So they will opt to inspect those properties just to make sure that no gaps. We had one recently that our calculator came back at 1.3 million. Insurance company went and did an inspection. They determined that with the debris removal and the level of customization, it should be closer to 1.65. So that gets adjusted. You notify the client it's not a huge difference in premium. The insurance companies often, depending on how far the term when they do the inspection, they may not even charge an additional premium or even tell renewal, but give you that extra coverage. It's really to protect the homeowner to be a nuisance. A lot of people think, oh, I'm getting inspected, and they start panicking. So that's good. There's always going to be issues. It can be fixed.
We owned a house that was built like 1900 years ago. It came up, removed it, and did inspection.
Yeah, and it was just a seamless process. They're taking measurements, they're looking at the construction quality of the home. We're gonna look at what's around you, do you have businesses around you, is there other homes? What's the condition of those? Because your surroundings are gonna determine your likelihood of loss as well. They kind of do that just to make sure that they have rate by peril product rated correctly. Make sure that there's no issues come claim time. Because ultimately you're buying a piece of paper until you have to use it. That paper is a promise. You want the promise to be kept, and inspections are part of keeping the promise for insurance companies. So same house, different insurance. This we see a lot. Insurance is a lot like a snowflake. Two are the same. You could have my rate that I pay for my house. It's very different from my neighbor 2 doors down that has the exact same house. Goes back to the location, right? That change in postal code, even if it's 2 doors down or on the other side of the street, rate could be very different. Sure, they're looking at the flood mapping and the water tables. One side of the street could be more prone to having a sewer backup because of the way it's sloped versus the other side. Going back to the owner's personal insurance scoring, their history, all of these things kind of factor in. So that's why we say same house, different insurance. It's never going to be the same. Even if you were the same person buying 2 houses right next door to each other, if there's a change in postal code, they could be a different. The seller's insurance is not transferable. Kind of already touched on that. Because one company's already insuring it, doesn't mean they will stay on risk. Often they will if that property has had a good history with that insurance company. We can leverage that relationship and say, hey, Aviva or Economic or Intact, whoever it may be, you guys have been on risk for this property for the last 30 years. Hasn't been any claims. Are you still willing to take it on at the new quoted rate for the new owner? And often they will. We try not to do that. We would do that more with an older home or a hard to place risk than we would with your standard resale in Sackville or Bedford or Hamptons Plains, because we want to shop the market and make sure we're getting the best combination of price and coverage. It's not always what the current owner. The buyer rating variables matter. What works for one may not work for another. So some people are more risk averse. Some people might be comfortable with taking a high deductible on the property. Some people might scare them and they say, oh, I only want to pay $500 if I have a claim. Some people are comfortable not taking overland water or sewer back. We hear it all the time. I live on a hill, that could never happen. Well, it does. It does, and it probably will as soon as you say it. It will never happen to you. And I said before, new policy, new rules. Every time that property changes hands, every time, even if it doesn't change hands, you call for a quote to a new company, now have to follow the new underwriting rules and guidelines. And to round it out, let's work together on this. We're all kind of in the business of selling homes. We're selling the dream of home ownership. We want your deal to go smooth. We want your deal to go smooth. We want to be the experts that kind of help you get through that deal and not have to worry about insurance in the background. It's like you work with multiple lenders and mortgage brokers. You have ones that you trust that it's a set it and forget it type of thing. It's what we strive to do at my brokerage. You give us all of the complete data up front. You can set it and forget it. We'll promise you that it is done. It is done timely, as quickly as we can, and that your clients can be taken care of. Right? Beyond just getting the best rates, same with mortgage brokers, it's about policy features, the coverage, ease of doing business. That's more important than anything else in what we do here. Because the quicker and smoother we move through things, the more likely you are all to get referrals, and the more likely you can move on to the next deal. Obviously, the deal is smooth. That client's going to come back to you when they're ready to size, downsize, or whatever it might be. So the best time to engage your broker is typically around the home inspection. So anyone that's online, if you could drop your emails in the chat, I'll get Jessica to send those to me so I can send you what we're looking for when on an inspection. So, and this is still for you. Love to see it. Those of you online that didn't see this, I emailed it to you, but this is essentially a one-pager of all of the details that we need to provide an accurate quote and also move swiftly in from quote to policy. Closings are getting shorter now. Additional timelines are getting shorter. The more complete this information is, the better. It covers all of the details that we kind of talked about through the whole presentation. You take this with you. Well, if you don't have a clipboard, invest in one. Take it, hand it to your client. Don't fill it out for them. Have them take care of it. And the reason I say that is it gives them, of course, a home ownership. It makes them aware of where to find everything, based so they're not just sitting on the sofa chatting and texting while they're going through their inspection. That they're actually paying attention to the details. That's just responsible home ownership. The more they know about the home going into it before they actually get in there, the better. This will kind of cover all of those details. And also make sure that you ask all the questions to the inspector. If they can't answer, then you'll know maybe we should get somebody else in, or let's ask the current home if they have these details.
A bit of a protection thing too, because they could always say, hey, I didn't fill it, or you did.
So we've seen that as well, right? That's worked with me. I always say, okay, no problem. Can you have the client send it to me directly? The reason we have that is the same reason that you don't take third-party information. Errors and omissions insurance doesn't cover hearsay or third-party information. But if your client, you could fill this out for them, send it to the client, they send it to us, and that's fine. Because they're basically saying, I trust this data on a sheet to be accurate to the best of our knowledge. We never want to see it come from her, for example. We don't, you know, I've worked with KW for a very long time. Anyone that I've done a deal with, you've sent me this information. I instantly go right back to the client to ask, hey, can you validate these details for me? That's just to make sure that we're all protected. So you don't want something to happen on an insurance policy and then they come back and say, well, you filled out that form. Because you can get roped into the suit for errors and omissions claims just as much as we can. Be prepared. So that's having this with you. I'll email it out to everyone. And just take it with you. Remember, take the pictures of the oil tank. Take as many pictures as you can of the home systems or anything that might be important. Insurers aren't so concerned. They are concerned with the condition of the property, but that's cosmetic stuff. They understand that if floors are scratched up, they don't really care. They want to know systems that run the home, are they in good working order? Having pictures of that really important. And for most insurers, it's necessary. So every time we insure a property that has wood heat, oil heat, we have the complete questionnaires that supplements to the insurance application that the client provides to say, yes, this is verified information that I have to the best of my knowledge. It doesn't need to be perfect, right? But it should be as accurate as we can. If you see something during an inspection that you're unsure of, you call my office. If you can't reach me, we'll answer the question for you and tell you what you should look for, what you should ask the current homeowner about, or if you need to get someone else to inspect it. You know, we've done a couple deals recently where fireplaces and the chimneys had a crack. We've had agents call us and say, is this going to be a problem? Seriously, no, it's not going to be a problem, but a person that specializes in chimney, we work with fellows that are excellent, get them in to do a full inspection while repairing it. The client is one of those ones, well, I'm not going to use it, and have them come in and completely cap the chimney and cap the fireplace off so it's not operational. You don't have to rip it out if you're going to keep it purely for aesthetic, but it should be non-functional because you never know what could happen. Maybe teenage kids that are having a party and parents are away and kids are like, you know what, I'm going to have fire. Right? It's happened. Gets used. If it's there, it's temptation, right? It's just you leave smooth around teenagers so nobody touch them. They say these things, right?
Chances there.
And then the last piece is disclosure. So this is a really important. We've seen in the past, I've heard some people comment. Fortunately, nobody from KW, so that's fantastic. If they don't ask, don't tell. It's terrible advice. Just because we don't ask does not mean you do not have, client doesn't have an obligation to disclose. It comes up a lot around Kitech and Poly B plumbing. You know, I've heard agents say if they don't ask if you have Kitech or Poly B, don't tell them because and then once they're in charge you, you won't have any issues. If you know it's there, if we ask it or not, you have to tell us. Otherwise, your claim could be denied because then we play this game of, well, you knew about it because it's in your inspection report. You didn't disclose it. That's not disclosure. The claim's going to be declined. We're asking a lot of questions. We're trying not to sound robotic on the phone or in person with that client. We're trying to keep a conversation going. Same as when you're out on showings, you're not just saying, oh, here's a bedroom, here's a bathroom, here's this, here's it. So sometimes these questions don't get asked, but we are asking the meat and potatoes, you know, how old is it? Type, that kind of stuff, you know, you'll always be asked at my brokerage, but some places will not specifically ask, is it Kitech or poly B? Always tell them, always if there's, you know, multiple heat sources, disclose all those, even if you're not gonna use them. So you don't want to purchase a policy for $1,000, $2,000, $3,000 a year, claiming the insurance company come out and say, well, I didn't know about this. The first thing they're gonna ask for process as the broker is a copy of that application, which has been signed. So if it's signed, that means you're telling us that that's accurate and true. If you didn't disclose it, it's not disclosure. It's a really big problem. Any questions?
One quick one. What if I close my house at 9 o'clock this morning and it burns down at 11?
Purchase?
You mean if you do your walkthrough, but you're not completely closed?
I just mean like, here's the key. You walk to the driveway, next thing you know, this is on fire.
For the insurance policies, we never insure for same day, right? So you would have closing date in mind, you do your closing walkthrough. We're insuring it for that day at 12:01. We always recommend the current order and overlap.
Okay, right.
These are big. We've seen delayed closings. I dealt with one, I think it was a week ago, call from a lawyer on this that like, we need to get a policy in now. And I said, well, you can't insure something you don't. Right? So the insurance policy is not going to respond. There's that delay in closing, even if your new policy's on there. So it's always the current owner should always have at least a 1 day overlap, not cancel at midnight, you want to pick up at midnight. That way, if there is any delay in closing, or you know, even if you're doing a walkthrough at 9 a.m., but the full funding doesn't come through until 4 p.m., you can't handle the keys till 4 p.m. The current owner's policy is still covering that house until that is fully transferred. So
One lawyer I deal with tells them to cancel their insurance after they've closed and cancel your insurance. He's seen it go a weekend.
yeah,
Right.
yeah, there's lots of instances that could push that and delay that. Better to pay, you know, an extra $20 or $30 than be sorry. And you know, we have seen it where current owners cancel their policy, didn't close on a Friday, which I think most of you try to close on a Thursday for that exact reason.
Yeah.
But it didn't close on a Friday, it was supposed to. All weekend, they turned off heat, pipes froze, property flooded, there was no insurance on it. Deal fell apart.
I even, because I'm OCD, when I do my walk, even if the clients are with me and we put on all the appliances and check them, I take a picture of the stove that shows it's off in my phone. That reassures me
Security.
Turn it off.
that I remember
Yeah.
to turn it off and that everything is off in that house where the heat, I'm taking pictures, I'm making sure that nothing happens to that house.
Do they have to disclose, like, they did cancel their insurance before you actually,
We wouldn't ask that you,
okay,
because they wouldn't do that either. The current owner's under real no obligation to share if the property's insured or not. Most of the time, the lawyers will be involved in that part, say, hey, you don't have insurance currently, get insurance so that if something happens, proceeds of insurance go to the new buyer so the deal doesn't fall apart. From our perspective, we're looking at our client, not the current owner. If they have a current home or tenant's policy or whatever it may be, some insurance are bad for rating. If you have a gap in insurance, you lose all of your loyalty credit, you lose all of your history, even if it's 1 day, resets the clock. But then you're insured as if it's your first time getting insurance, as opposed to maybe you had tenant's insurance for 5 years. So you kind of want to advise them, hey, if you have tenant's insurance, keep it in place, wait until your house closes. Don't cancel it because you're trying to save the $30 right now, or $50 or whatever it is. Keep it there. The reason to keep it is it covers all of their contents in transit. So when they're moving from property A to property B, something happened, the road that the belongs, you're going to be covered. Because new policy won't cover anything that was already been.
Great.
Other questions?
just have out of curiosity, so say, you know, Hammond's Plains, you want to rebuild on your lot, that lot may not be ready for who knows how long, before they can clear it and reset it to actually build on after the fire.
So every policy will have what's called additional living expense coverage. So if you're looking at a policy, it'll say additional living expense, it'll say ALE. Coverage is specifically designed. You have a claim, you have to be put out of your home to cover the cost of temporary accommodation. So as long as that's an adequate limit, it doesn't really matter how long it's gonna take, the insurer is gonna cover that limit. Every good policy will also have what's called a single limit of insurance endorsement, which allows them to move funds from one area of the policy to another. Often people are overinsured because policies are somewhat prepackaged. You have your dwelling limit, which is also covered by guaranteed replacement costs. So that if you think of it as an invoice, let's say the house is insured for $600,000, but the rebuild is $750,000. The max the insurance is going to build to that single limit of insurance is $600,000. So often people are overinsured in outbuildings and contents, right? Accumulate a lot of stuff over the years that you're probably not going to replace. The one part where people are often underinsured is that additional living expense. We saw that with the Tantalum fires. So what they'll do is they'll pull some of the excess money from contents and move it to the additional living expense, or pull some of the money from the outbuildings there to make sure you're covered, but only if you have a single limit of insurance. It basically makes your policy a pool of money you can use for whatever area you need to until it's gone.
Not travel.
You can't use it for one vacation. You can't say, well, I temporarily want to live in Costa Rica. They're gonna put you up in lifetime quality property. They try to keep you in the same neighborhood if they can. We know the state of the housing market funding rentals, especially shorter term rentals. That's not always going to be the case. So they may have to go to Halifax. They may have to go outside of the city to Windsor for that additional living expense. Insured, you cover the excess fuel. If you have to drive your kids from Windsor to Hammond's Plains to get to school, they're going to ask you what was your average fuel. Prove to us, show to us what your average fuel consumption was. Obviously, and now what is it now? You have to commute from there to work or to drop your kids off, and they get that all becomes process. One thing they're not covering would be like the wear and tear on the vehicle, because those are consumable items anyway. But
Thank you, Aaron. This was
Yeah. Yeah, that was great.
a great session. Thank you so much.
thank you.
We're always disc training. Did you do your disc assessment?
But yeah, I wanted to,
Did you?
yeah.
No, they're very idle.
That I like to have